Hello, this is Kevin from Crypto MY. In today's episode, let me teach you guys how to do a simple technical analysis in cryptocurrency. As you can see here, right now I'm using the Binance platform to do my tradings. If you guys haven't have a Binance account, I will put down the link at description below. You guys can do the registration directly from there and start trading from there. Actually, you don't need to use Binance. You can use other platform that offers spot trading such as MXC, Huobi, Bitfly. There's other platforms you can use. Everything I will put down at the description below. So as you can see here right now, this is the Binance platform, and this is how Binance platform looks like where after you've done the registration and after you log in. And first thing you need to know is when you are doing trading, if you want to trade cryptos, or you want to do any investment or any tradings in the market, make sure to use desktop or computer or laptop to do trading. Never use phone or iPad to do trading, because for example, when you use phone to do trading, your view is so small that you cannot see what happens on the right side and on the left side. Even no matter how you tilt it, it will still be very small for you to see, for you to analyze. As a trader, we always use phone to check what's happening to the market right now, and that is what I do most of the time. I always use the phone to check only. I never use the phone to analyze the market. Okay, so always use PC to trade. And right now this is Binance platform on the desktop version. And for a beginner, I will strongly advise you guys to always start from spot trading. Never use perpetual swap or option trading if you are not yet expert in your trading skills yet, because whenever you use perpetual swaps or option tradings, yes, you have leverage for you to trade, but if you are not good in doing leveraging, or you're not good in doing a technical analysis, you will always lose a lot of money. Okay, so always start with spot trading as for a beginner. And right now this is spot trading. If you don't know how to access to this spot trading, it's very easy. Just go up to this trade, go all the way down to this classic, and this is where you get in the end. So on the right side, you will see the pairings that you can choose. And let's say right now this is in BTC US versus US dollar. And right now, let's say if I want to analyze, okay, how do I want to analyze, and what indicators should I use to analyze the market for a beginner? It's actually very simple. Okay, let's say I want to analyze Cardano versus US dollar. So right now I go onto my right side, there is a ADA versus USDT. Okay, once I've clicked on it, you will see this is the ADA versus USDT chart. So let me zoom in a little bit. Okay, so how do I want to analyze the market? First of all, you need to input the indicators, and right now this is a very clean chart. As you can see, there's no moving averages, there's no indicators to help you to analyze the market. But before that, always go to trading view, because if I'm not mistaken, when you open up your Binance, you always starts on the original view. So what you need to do is just click on the trading view, because the trading views will allows you to analyze the market using the tools given, and all these tools are very useful. As for a beginner, I won't say beginner, I won't say professional, I won't say average trader, but most of the traders needs to learn how to maximum utilizing the indicators that you understand, because there are a lot of indicators outside that you can use. But let's say if you don't even understand all the indicators, and outside there's many gurus teaching you sort of different indicators, and if you don't know how to use them and you apply everything on it, and you apply all the indicators on it, it will only give you a confusion that you don't even know how to use it and how to maximum utilize all the indicators. Then it will give you like, hey, why is this like this? Why is it like that? And then you have a confusion to do trading. So always mix your trading views as simple as possible, as understandable as possible, so you can understand the chart easily, you can understand the indicator easily, and most important is whatever indicators that you put in, make sure you understand what is it they're trying to tell you, because every indicators have a storytelling behind. So as a beginner or as a trader, I myself will start off with moving average. Sometimes I also use Ichimoku, but for this episode I will use moving average, because moving average is the most easiest indicators and the most simple indicators that you can analyze the market. So once you have search up the moving average, you need to just click on it and then it will pop up on your left side. So once you have the moving average here, let me zoom in a little bit. Okay, so once you have the moving average here, the second thing you need to do is you need to click on the volume. So once you have input the volume, and last and not least, you need to input the RSI, which is the relative strength index. So once you have all these three, you can just close it. And of course, the first thing you need to do is let me change the color so you can see it clearer. And I change it to yellow so you can see it clearer. And right now, the moving average is showing 9 on the left side. Can you see that? There's a left side, there's a 9 digit, which is represent this line is moving average period of 9. But I don't want to have a period of 9, but instead of 9, the length, let me change it to 20. Okay, let me change it to 20. Because if the length is very low, you will gain a lot of noise, and all this noise is very hard for you to predict the market in the end. I will explain to you why later, why we use moving average 20. And let's go on with the setup right now. So let me conclude a little bit. The first step is moving average 20. Second step is the volume, and the third step is the RSI. So how do you want to do trading in the crypto market? First of all, I always check on the weekly chart first. On the top left hand side, you will see the weekly chart, daily chart, 4-hour chart, hourly chart, 50-minute charts, and you can actually go and search for other time frame if you want to. As a beginner or as a trader, I always start off with weekly chart first, and I want to see where is the market heading to. Okay, how do I want to see? It's very simple. Let me change the color of the moving average so you can see it clearer. Let me change to yellow also, so you can see it bigger, thicker. Okay, right now it's in yellow color, so this is the moving average 20. So right now, it's very simple. How do you want to read technical analysis, and how do you want to read the indicators from here? From right here, what you need to know is this is called the candlestick, which is there's a red candlestick and there's a green candlestick. Red represents drop, and green represents up. It's very simple. So whenever the market is going up, you will see a green color. But whenever when you see a red color candlestick, it's going down. It's very simple. So how do you want to utilize the moving average, the volume, and also the RSI? Very simple. First of all, you need to see whether the candlestick is it above the moving average or below the moving average. If it's above the moving average, meaning that the buy trend is still on track, meaning that buyers are stronger than the seller, or I could say that the buy trend is still very strong compared to sell trend. This is your first indicator. Okay, so like I said just now, moving average to indicate whether it's a buy trend or a sell trend. That is the first step you need to know. And the second thing you need to know is the volume. Okay, volume is very simple. Green represents the buyers and the red represents the seller. So whenever you see the greens, means actually you know that the buyer is stronger compares to the seller. So overall, you see that there's very strong buyers throughout these 3 weeks. That's why you see a very strong uptrend. So of course, if you see something red bar like this, then you know that the seller are stronger. So this is just to show you whether the buyers volume is it stronger or the seller volume is it stronger. Okay, so the last but not least is the RSI. Okay, RSI is very simple. On your left or right side, you would see the 30 up to all the way to 90, and the middle line is the 50 line. Can you see the 50 line here? Actually, there's a zero. There's a zero. Yeah, there's a zero here. Okay, so it's all the way from 0 all the way to 100 or 80. Okay, usually we will just look around the 0 all the way to 80. Okay, So what you need to know is the middle line is always on the 50. The middle line is always on the 50. Okay, this is the yellow line, right? When the line is above the 50 level, meaning that the buyers are stronger. Okay, meaning that the buyers are stronger. So whatever lower than 50, meaning that the seller are stronger. So this is the 3 steps you need to know for a beginner, because the moving average and the RSI is always related to each other. Okay, so this is the first step you need to do. Right now you need to see, okay, right now the weekly chart is showing that this is a very still a very strong buy trend, and right now it's still above the moving average, so it's considered a buy trend. And then right now the RSI is still showing the above 60, and so it's considered a buy trend. So right now the whole weekly chart is showing you that Cardano have a possibility of uptrend right now. So the next step you need to understand is the moving average is also represent the support and resistance level. Okay, support resistance level is act like a wall, a bus stop or whatsoever, whereby whenever it touches the moving average line or it touches the support or resistance. Okay, resistance is always on the top and support is always at the bottom. So whenever it touches the support, the markets know that there is a bus stop there that need to stop a while, meaning that a lot of people will start to buy at the area, or a lot of people will sell at the area. Okay, so a bus stop, the resistance and support is a very, very important thing to know, because if you don't know how to see your support and resistance, you are having a hard time for you to enter the market at a good price. Okay, let's say from this chart right now, I will do a very simple support and resistance using a horizontal line so you can understand better. So on the left side here, you can actually click on the horizontal line and you just input on the chart. Okay, how do I want to put this horizontal line is whenever I see 3 candlestick, no matter it's the tail or the body touches a similar area, I can actually draw a straight line there. So you see here, there's 1, 2, 3. So there's 3 lines here, 3 tails touches. So I just put a line here because I know that when the market touches this line, the buyers or the bulls will buy back the coins. Why? Because every time the market tries to dump the coins or want to sell off the coins, you will see the buyers will come in to buy back all the coins. That's why you see there's a consolidation up and down, up and down. When sellers try to sell, want to make it and sell furthermore, when you sell, of course, the price will get lower and lower. So when it touches this line, the buyers know that, okay, this is the bus stop that I can buy back the coin. Okay, so when it touches this line, usually the buyers will buy back the coin. But of course, let's say if the bulls loses, meaning that if the bulls are not strong enough to buy back all the coins at the specific time, if you see the candlestick closes below, then of course you will see the next bus stop is around this area. Okay, very, very simple. So let's say if the candlestick closes below this area, then you will see the market will go all the way down here because the nearest bus stop or the nearest support area is around this area. Okay, right now I just focus on this area. I'm not focusing anything at the past, because of course if you want to know, if you want to trade in crypto, you always want to look at the past. Okay, right now I only look at what I see right now, and I just want to teach you a simple guide on how to want to do a simple trading. Okay, so let's say you have drawn the support level right here, and you want to draw, of course, the resistance level. So the resistance level, I'll put it here, right here at the highest point, and of course right here, because you have touched 1, 2, 3 times, so I just want to make sure that it's just make sure that you see it properly. So what right now is, if you can see here, the market knows that every time it touches here, it will fall all the way down here, correct? So if the candlestick able to close above, meaning that the bulls are stronger than the bears, when you see the candlestick closes above this line, you will automatically know that this is a very, very strong uptrend. So when it breaks above, then you will see a very, very strong bullish signal all the way up. Okay, so how you want to do a trading right here. For weekly chart, I won't be doing technical analysis on weekly chart. I always use weekly chart to indicate whether this week is it a buy trend or a sell trend only. Okay, so let's just look at the daily chart. Okay, daily chart is also for me to indicate is it a buy trend or a sell trend, and it also helps me to indicate whether is it a good time for me to enter it right now. As you can see on the daily chart, this is the latest daily chart that I've seen, and this is showing a bullish pattern. Okay, bullish candlestick pattern. Okay, how do you want to know whether it's a bullish candlestick pattern or not? I will put down the link at below. You guys can actually read up some of the candlestick patterns that are outside available in Google. So whenever you see a candlestick pattern right here, like we call the bullish engulfing, automatically you know that this is a reversal pattern. So whenever you see a reversal pattern, you know that there's a possibility of going up, because you want to catch the bull trend, because right now it's showing a bull market right now. So you want to catch a bull trend. You don't always want to catch a bear market. So you always want to catch a bull trend. How do you want to catch a bull trend is look for the candlestick pattern. So right now you see the daily chart, you have the bullish engulfing here, and right now you want to go to H4 to find a good entry point. Okay, so how you want to find a good entry point right here? Okay, let me remove it so you can see it clearer. Okay, right now you have seen it something like that. Okay, so right now you can see that this is the moving average 20, and this is the RSI, and this is the volume. Okay, the volume I just remove it a while, so we just focus on whatever it is right here. So what you need to do is you always need to learn how to see the chart patterns. Okay, how do you want to see a chart pattern? Is basically you need to like visualize it from a zoom out perspective. You always want to zoom out far so you can see it clearer. As what I have seen here, this is a very strong head and shoulder pattern. Can you see? Okay, let me draw a vertical line, a trending line here, all the way down here, and you can see this is a obvious triangle head and shoulder pattern. Okay, so you can see that when you see something like that, you know that this is the inverse head and shoulder, right? So inverse head and shoulder, what does it mean? If the market managed to break above this trending line. Okay, this trending line, if I've drawn based on the candlestick, they have touches 3 times. So 1, 2, 3. Of course, if I want to draw it to be exact, it will slightly be upwards, something like that, or something like that. Okay, something like that. What you need to take note is, right now, you know that the moving average line is already been broken, and right now it's staying above this moving average line. As you can see here, let me zoom out a little bit. As you can see here, like I said, the moving average line is also act like a support and resistance. So whenever it fails to break below the moving average, you will see a very strong bounce back all the way up from the moving average. As you can see here, if it breaks below the moving average line, you can see a very strong downtrend. As you can see here, if it breaks above, then you will see a very strong uptrend. If it fails to break below the moving average line, you will see a very reversal, a strong reversal uptrend. Can you see that? So moving average is also an indication for you to indicate your support and resistance easily. So right now, moving average 20 here, it fails to break below. Okay, even if you break below, we know that the nearest support area is right around this area. Okay, right around this area as you have drawn in your weekly chart. So this is your this is your what they call your support area. So if it breaks below, the nearest support area is around this area. So right now, this is your trending line, and this trending line is also representing your resistance level. Okay, resistance level, it will never be always on the horizontal line. It can be slanting like this, something like this. So right now, from what I see, this is a very, very obvious inverse head and shoulder. So in order for it to break above, meaning that, okay, first step, you know that it already break above your moving average. This is your first step. And the nearest resistance level is right on top this area, because it's your trending line. The second step you need to know is the RSI above the 50 level. Right now, yes, it's on the 54 level. So right now, there is 3 confirmation that it is a very strong uptrend. So the last but not least, what you need to wait is the candlestick to see the candlestick is it closes above this trending line. So if it closes above, if it really closes above, then you will see a very strong uptrend, meaning that it already break above this resistance zone. It break your first resistance zone, second resistance zone, and your RSI is showing the bull trend. So there are 3 confirmation you need to know. First of all, moving average, make sure the candlestick it break above or break below. If it break below, meaning that it's a sell trend. If it break above, it is a buy trend. So when it break above, you need to make sure that your RSI, your second step, your RSI is above 50 level. And the third step, the last and not least, is break your support and resistance level or not. If one of it doesn't accomplish, never enter the market. Okay, so right now, if it really closes above this resistance zone, then your entry point should be around this area. Always wait for this candlestick to close, 100% close, before entering the market. Never say like, okay, right now the moving this candlestick is now floating around this area, right? Okay, let's say another 10 minutes later it floats all the way up here, but it's still floating and it haven't closed yet. But some of the traders have a mistake that whenever they see the market, the candlestick goes above, they quickly enter the market without looking at the time frame. As you can see here, this is 4-hourly chart, meaning that every 4 hours it will forms a new candlestick. Okay, so right now this candlestick is already been for 2 hours because right now it's 6:30 at Malaysia time zone. Every for Malaysia time zone, usually 4 o'clock will form a new candlestick. So it is 4, 8, 12, 4, 8, 12, something like that. Meaning 4 p.m. to 8 p.m. 8 p.m. will have a new candlestick, and then 8 to 12 a.m. 12 a.m. will have a new candlestick. So I need to wait until 8 o'clock to check how does the candlestick closes. If the candlestick closes above, yes, I can straight away enter at the price, because usually when you enter the price, the market will do a reversal and then it will go all the way up here. Of course, where will it goes to? This is where your resistance take place. Okay, this is the nearest resistance level right around this area, and also right around this area. 1, 2, 3, 4. This is your resistance zone. So your profit level can be around either this area or this area. Okay, but in order for it to break above this $2.30, it must first break through this $1.96 and also this $2.10 first before it go further up. Very simple. So as you can see, this is inverse head and shoulder. Usually inverse head and shoulder is how do you want to maximize the profit is we use the price range, we drag from here to here, then we know this is about 40%, meaning that if it breaks above, it will be 40% upwards. So yes, you might say that, wow, it's a bit too high. But usually when we look at the law of the chart pattern, it shows that especially the head and shoulder pattern, we always analyze the profit is from the the neckline all the way to the head, and then from the profit itself we apply to the take profit area. So what we get is it could reach $2.30 if it managed to break above. Okay, so of course if you want to be safe, you want to be a safe trader, you want to be as a beginner, of course you can always set the lower price for your take profit area, meaning that you can exit the market around this area or this area or this area. But if let's say if you are not a trader, you just want to buy and keep, of course you can just buy at a certain price and then keep for long term. Okay, that is not a trader, that is for investment purpose. So I hope that you guys can learn this simple step that I taught you guys, and always remember, practice make perfect. Okay, not to say that one day you learn, then one day you can be a pro, or one day you can be a professional trader. No, it takes months and weeks or years to understand how this trading works, and always practice. Okay, so I think that's all for today's episode. Remember to click like, share, and subscribe if you like my episode, and I'll see you guys in next episode. Bye.